Good evening, all. Ira Epstein of Linn and Associates. I'm adjusting my t-shirt, if you would. You know, I feel like one of those guys on that commercial. This is with your Spider ETF video for Thursday evening, and this is the 9th of July, 2020, and we're after 6 p.m. I've had no air conditioning, and we're hitting 95, 92 in Chicago day after day after day. The hottest time in July. Might be a record now. Tomorrow, they're coming. I have been miserable. My wife was in a hotel. It's not been a fun time. So you go through this. We all go through it, right? Tell me you haven't been there. All right. Today we saw an interesting day in the sense we got the jobless claims, and when you looked at them, glass half full, half empty type of thing. I don't think they mattered too much one way or the other. They came out early at 7:30. The break in the market, though, in stocks didn't occur until later. And I looked at it, and what I was looking at, the Supreme Court decision hit the wires and the stock market fell. And the decision on President Trump's income taxes, our Congress cannot see them at this point. Goes back to the lower court, and they'll make some changes to the rulings, whatever, and then maybe the Supreme Court will hear it. What did happen, though, is the Supreme Court did give Cyrus Vance, the Manhattan District Attorney, the right to see things. When is my question. I read one article that said within 3 weeks, 2 weeks. I read another that said it'll be after the election. I think that's very important. I say that because of this. With this whole presidency, if there can be a leak on anything to hurt him, that will happen. I don't care if Mr. Vance is the most honest person in the world, and I have every reason to believe he is. I believe that within the office there are people that absolutely hate the president the way they did in the White House, and things happen. That's all. Do I know it? I do not know it. Do I expect it? If he gets it before the election, I certainly expect parts of it will magically appear in the news. You don't have to believe me. But that's what rattled the market. Now, the other thing keeps going, the COVID-19, and the situation's getting worse, not better. More states are in trouble. More states are seeing their IC units fill up, more cases being done, and way more people found to have the problem. Are we going to shut down again? No, not the economy. Are we going to shut restaurants, salons, gyms? Yeah, where it gets serious enough. And you're going to see that. This is the new world, folks. Get used to it. Without a vaccine or a treatment, this is what we deal with till we get to then. So do we have a V-shaped recovery? Do we get the W? I'll let everybody argue that. When we look at the tech sector, it's a tale of two very different worlds. It's actually like the story, Tale of Two Cities. I hope you read it. It was great reading. But when you look at this, what you're seeing is in the tech sector, specifically XLK and QQQ, there can be nothing but a correction as a buying opportunity, and we're seeing that just keep showing up and up and up. And the market keeps making higher highs and higher highs on each break. Today we saw the Dow get hit hard. We saw the S&P get hit hard. The QQQ came running back at the end of the day, new high. Not surprised. I've been adamant, do not be a top picker. First of all, the trend's up, so why would you? You've got higher lows again, and higher highs. So the trend is kicked back in. What would hurt the trend is getting back under yesterday's low, which was 106.26. Barring that, higher lows, higher highs. You're well over the 18-day average, but it's not supportive. Why? To get down to it, you got to break this pattern. You'd end up with a higher high and low if that were to occur. Where's the resistance? Ta-da! The upper Bollinger Band. What have I called Gorilla Glue when a market decides to go? And yes, Gorilla Glue. You should send me a case of your stuff. I keep promoting you. It's when you lock in on that upper Bollinger Band. The algorithm's built to not allow you to stay over it more than 5% of the time. So the market and its strength hits like a fence, stays there, but keeps carving out the higher highs, and it's being matched with the embedded reading. Until it's over, it ain't over. So that can go higher. What about and by the way, that was the XLK with, I'm sure I had fixed that, and this is it with the slow stochastics. I don't know, I thought I saved it. I think the heat's got me. SMH, what's the name here? Semiconductors, another product. Not quite technology the way that we think about it, right? You know, when you're putting together the other techs, it's more what they do. But if you think about it, Facebook's a product, but this is hardware. So it's a bit different, yet the market just doing the same darn thing, same pattern. On anything tech has the market's love. Industrial sector stinks. It can't even get up and stay over the 18-day average. So the old world, let's throw it away. The new world, everything it does is rosy for a time. It's like the Chinese. Read Bloomberg tonight. You'll read about Chinese investors saying they can't lose in the market. They're putting all their savings in because the market's just going to continue going higher. Bubble, bubble. In any case, I'm looking back here. Will the market get down to the lower Bollinger Band in the 100-day average of closes? Where's the battleground? The 18-day average. Is there a trend? No. What about XLE? Well, we've been looking, and I've been saying, as long as you have an embedded reading, I'm looking for this market to get sold on rallies, and it was. You can see the 100-day average and the objective if the market falls. Ideally, don't know if it'll hit it, the lower Bollinger Band. Kaboom! I think the pros took money off the table today, and on rallies, they'll hit the market again. What do you want to own energy for if COVID's getting worse? I can't put two and two on that together. In QQQ, I've already covered the subject. Up and away, embedded reading, gorilla clue. What about the EFA? All right, here you're caught in that narrow band. Remember what I told you? You form what's called a pipe, and when you get a pipe, be careful. You don't follow through until you get a breakout one way or the other, and do you get false breakouts? If you rally, I'm looking for very solid resistance, 62.66 to 62.99, the 200-day average. If you break from here, 60.21 support. At this point, there's divergence. Momentum is turning down. You have the swing line up and bias up. A lot of divergence, and that's typical when you get these narrow pipes. In the gold market, I'm a little concerned here. Trades get crowded. And I watched today as the stock market fell, and gold, instead of getting a bid, you saw the bid coming into $1. That hurt the gold a little, but I saw the bonds and notes getting bids, and the gold all of a sudden acting the way it had before. Doesn't want to participate as any part of a safe haven. So it's not being considered that. It's an inflation number right now, or some other event. But I'm concerned it could be ready for a bigger correction than you think. Not a bear market, just a correction. GDX, I told you, I'm expecting problems up here. You need a good break. You had it today. You had an outside day down. Now, as long as you don't get back under 35.52, I'm expecting buying on this pullback. And I'm expecting to see, until you lose the embedded reading, that it gets well supported. Lose that reading, then I think you'll hit wherever the 18-day average is. TLT, we've said we think we're just in this sideways action. How many times have I mentioned here, I think you got to think this way. It's very dangerous to be short. The Fed has the markets back. The Fed is going to, if they have no other tools left that are working and COVID's getting worse, yield curve controls. I get scared about that. So that bias is there, but you hit the upper Bollinger Band, you're overbought. Are you embedding? Okay, both numbers over 80 today. Both over 80 yesterday, but not the day before. I think the pros came out of this market today. That's what I think. FXE. Well, if the dollar's playing around right here, maybe this is going to break. Now, I don't want to see this market under 106.33, which means you're not a buyer, or the pros won't be a buyer, in my opinion, at 106.22. Why? Because you break the pattern of higher lows, higher highs. This market has to get its footing right here, right now, or you're going into more sideways trading, in my opinion. So you put it all together, you try to come up with ideas, and as many of you know, I try to do that for you in our offerings. Now, I showed this yesterday, I want to show it again. We had a lot of response to it. This is a primer on price charts, be it price bar charts, area charts, candlesticks. Trend lines, how do they work? Chart patterns, moving averages, one of my favorite. Oscillators, you know I'm in love with that. I don't use market sentiment the way that people do. I look at spreads, forward, backwardation, you got to see what they're doing. Arun indicator, price time. Elliott wave, nah, I don't bother with the options primer. The reason, by the way, I don't bother with Elliott Wave, I've never found it to be for me. That doesn't mean it won't be for you. Something I can even understand. After the fact, I can go into any classroom and explain it. Trade during it? No. You know, I stick my neck out for my subscribers day in and day out as to what I think is going to happen tomorrow, not talking about what happened back then. That's what people want. I am not saying there aren't great Gann and Elliott people. I am sure there are. I'm just not the guy. With that, Ira Epstein, if you need help, give us a call. Talk to you tomorrow.